Hello Maverick Traders, this is Imri and welcome to today's currency recap. So it's been a quiet news day for the most part today. There was some reports about the housing market continuing to slide and you know, on the other hand, the jobless rate continues to fall. So it's more or less a mixed bag for economic news, and that mixed bag of news has definitely reflected itself in the price action we've seen over the last couple days, where it's been a little bit muted. The only outlier today in terms of the markets that we track here on this page has been in energy, where oil has outperformed on a relative basis. And there isn't any high impact news coming out tomorrow either, nothing that's scheduled anyway. So just keep that in mind, as you're considering your trading plan and looking at your price charts, getting ready for the trading day tomorrow. As always, first up, we have the S&P 500 index, and we're running into this trend line that I showed you guys last week. So we're pretty much right there, and the relative strength index is giving us an overbought reading. Now, as I like to say quite frequently, just because a market is overbought does not mean that it is over. So I'm not saying we're going to come crashing down off this trend line, but I think when you combine the fact that the swing points here from this trend line, the swing points that I'm connecting to draw this trend line have each preceded significant sell-offs, I wouldn't be surprised if the market were to treat this trend line as resistance over the next couple days. It's possible we get a false breakout through that trend line as well. It's just something I'm keeping on my radar, and I suggest you do as well. Next up, we have this resistance level in the Vanguard Total World Stock Index coming in right around 94.70, and we kissed that level just a couple days ago. And again, I wouldn't be surprised to see if we treat this level as resistance. Now, whether we get a sharp pullback or more of a sideways one remains to be seen, but I'd personally be a little bit surprised if we just punched right through this early next week and just kept going without looking back. Of course, anything's possible, but again, if I'm reading the tea leaves, if you will, that's kind of what I'm seeing here, is that this could work as stiff resistance, especially as the S&P 500 is running into its own resistance level. Over in crypto, so this is that resistance level I was calling out, guys. The combination of running into the price level from this last pivot combined with the parallel trend channel here that I've drawn. We have sold off, in the crypto basket over the last few days, but sell-off looks more like an orderly pullback rather than, a violent reversal. So given how flattish the momentum looks right now based on the moving averages, I'd say crypto is a market to be very careful with. I'm not confident calling that market one way or the other. We need to see something a little more dramatic happen first, I think, before this market tips its hand. So, given the market's technicals, I'll stick with a +2 rating here. Just, again, be wary. The fact that we're running into that trend line does give me cause for concern. And then again, over on the news front, just not all that much to report. Nothing really coming out, tomorrow. So nothing to worry about there. In terms of currency analysis, well, first up, we've got the cryptocurrency market. Ethereum was the clear winner, whereas Cardano was the clear loser on the day, and everything else, for cryptos at least, remained more or less flat. Over on the fiat side, it's again really interesting. We have the commodity currencies leading. The European currencies, particularly the euro and the pound, languished a little bit. And the dollar outperformed against everything. So if you weren't long the dollar, then I would hope, you were long one of the commodity currencies. And if you paired, any of the commodity currencies against either the euro or the pound, I think you would have done pretty well. And being short yen was a messy trade, but it might have worked out for you today as well. But yeah, it still remains a dollar play, and we're definitely going to take a look at the dollar basket in a bit. So stay tuned for that. But first, we're going to take a look at velocity. So if you are looking for trades tomorrow, and on a personal note, tomorrow for me is probably not going to be a trading day. I'll be here observing as always, but I'm unlikely to jump into anything. But if I was going to, I'd be looking at the dollar and perhaps some of the commodity currencies based on current velocity. The Canadian dollar would be my second choice. And I think continuing to short the euro, the pound, and the yen seem to be quite safe plays. So without further ado, let's take a look. We'll hop over to TradingView and take a look at some currency pairs, or currency baskets, I should say. So first off, I want to take a look at the Aussie. So here in the Aussie, this box that I've drawn here has been a very messy area, and it's served as a magnet both on the upside and the downside. So you can see we found support. Let me just switch over to candlesticks, might be easier for you guys to see. Throw on some moving averages as well. So we've traded down there, and we found support, and right now in the 4-hour chart, we're running back in a moving average resistance. Here's what I'd really like to see in the Aussie basket if I wanted to play this on the long side, right? You can see we're running into the upper boundary line of this parallel trend channel right now. I'd like to see a breakout out of this channel, and then ideally have a bullish moving average crossover again before I consider playing the Aussie long. On the short side, we need to break below this level and stay below it. That break below looked promising at the beginning of the month, but it turned out to be a false breakdown. Let's see if we can punch through that level for real this time. The next currency that I find somewhat interesting is the Swiss franc. So obviously, right, we have some resistance here, potential double top, but the moving averages have been providing nice support. And if I'm looking at momentum, I don't really see anything too significant there. So for me, it'll be interesting to see whether or not we can punch through this resistance level in the Swiss franc basket. Otherwise, I think there's a pretty clear trend line here. If we take that out, we're probably heading back to this mess of consolidation over here. So that could potentially be a good opportunity to short the Swiss franc if we get a double top formation. The euro wants to break down. It seems pretty clear to me. We just need to stay below, this pivot point level, which on the euro basket comes in at 121.98.8. So we did break below that, and we got sucked back into the box. Let's see if we break down. I think we will, and if I zoom out a little bit, I think there is quite some downside to go, and I think it's not impossible that we'll be testing 2012 levels in this basket over the next several months. Moving on towards the yen, been trading sideways for basically a couple months now, and I think this is nothing more than a prolonged period of consolidation before we break lower again. I know it can be tempting perhaps to label this as a possible bullish power reversal in the making. Look, the yen's got to do a lot more, in terms of the basket before I would consider a long-term change in trend in the yen. So for now, I see the yen basket remaining weak. Finally, we've got the dollar. So in the dollar, I've been saying, hey guys, watch out. Whenever we've traded into this resistance level that's shaded gray box here in the past, we've sold off. Happened in 98, happened in 09, happened in 09, beginning of the year, and most recently happened in March 2020. So we, in all fairness, we did sell off for several days, but the way we're trading back into that resistance area makes me think we might just take it out. The dollars continue to surprise me at every turn, I must admit. I've been too early calling the top, but here's the best part. You can have a view on a currency doesn't mean, you have to trade your view. You trade the chart in front of you. And right now the chart in front of me is telling me that the dollar is still looking bullish. All right, and I'll turn considerably a lot more bullish on the dollar if we can break above the July highs. This high right here. All right, so that's it for potential currency trades. Let's get back. So in conclusion, there's not going to be really any news tomorrow. Markets might remain quiet, so be patient. Pick your trades carefully. There's zero pressure from the firm always to get into a trade. All right, there's a lot of other prop firms out there that want their traders to be active. They want them, generating lots of turnover in their accounts. We're not like that. We want you to follow your plan. So there's no pressure. Any pressure that you might feel is 1000% self-imposed. And I'm telling you, that kind of pressure gets traders into trouble. So be patient, pick your spots carefully, and I'll see you next week.